Car Insurance 2024. How to save money on car insurance in the USA in 2024. Drivers are being hit by a wave of sharp increases in the cost of car insurance during the renewal. They could potentially save hundreds of pounds a year on car insurance by changing their supplier, but most of them stay on the same policy and pay much more than they should. In 2022, the Financial Supervision Authority ordered insurers to stop raising prices for regular customers when renewing, but many drivers still note a significant increase in premiums when renewing. Even if you don't succeed, your current insurer may not be the cheapest and most suitable for you, and it's still worth checking the prices. It is not difficult to compare car insurance prices using comparison sites, and you can find out the best prices from a huge number of insurers in less than 5 minutes. Customers can also compare the quality of the policies offered and see if they are more profitable than their current provider. But switching is not the only way to reduce car insurance costs. Follow our 10 steps below and see if you can lower your insurance premiums even further. 1. Look for the best policy worldwide. This is the #1 way to save money on car insurance. Drivers can save hundreds of pounds by going shopping when renewing their insurance policy. The online comparison service can do all the hard work for you. Enter your details and check out the prices offered. You can change the amount of excess that you are willing to pay and the mileage that you will drive and get new rates. It is easy to get a price offer using price comparison sites. Motorists are strongly advised to compare similar policies. Some policies may seem cheaper at first glance, but on closer inspection, they may not offer the same level of coverage when you need to file a claim. It is also important to check insurers that are not available on comparison sites such as Direct Line. If you have been satisfied with the insurance provided by your existing provider so far, but you are not satisfied with their renewal offer, tell them the best offer you have received from a competing insurer and ask them to at least match it. Customers should also be aware that insurers will try to include administrative fees for making changes to the policy in the medium term. This fee, usually ranging from £25 to £50, will be added if you change your vehicle or home address. However, you can request a cancellation of the fee if minor changes are involved, such as replacing a regular license plate with a personal registration number. 2. Think about a telematics policy, black box. Black box policies are when an insurer installs a system to monitor your driving in your car. This is intended to encourage those who drive carefully. Many of these devices are designed for young motorists who can significantly reduce their high insurance premiums by installing one of them and proving themselves to be a reasonable driver. However, any motorist can get it. Officially called telematics, these devices check your speed, how aggressively you accelerate and brake, and how carefully you drive. They also record whether you are on the road at a dangerous time, for example, in the early morning. They can significantly reduce insurance premiums once you start proving that you are a good driver. Some insurers even offer a pre-discount when applying for a telematics policy. In fact, a study by Compare the Market found that 52% of drivers aged 17 to 20 could save money by switching to a telematics policy rather than a regular one. By switching, these drivers could usually save an average of about £995. 3. Be careful how many drivers are named. Another way to reduce insurance premiums is to ensure that only regular drivers are named in the policy. Bringing in a young inexperienced driver can be a false economy, especially if you have a large car with more power. The amount of the bonus depends on the youngest driver, and he or she may not have a no-claims bonus. Insurers are also actively fighting with front people when parents insure cars in their own name for children in order to reduce costs. If you are the policyholder of a car driven by your children, make sure that you are indeed its primary driver or that you claim otherwise. You can always put someone in for a few days when they really need to get behind the wheel of a car. 4. Pay annually. When applying for a new policy, drivers will be given the opportunity to either pay for it for the whole year in advance or in monthly payments. Many choose monthly payments because this means that you don't have to part with a large amount of money right away, but if you can afford to pay the annual premium upfront, you could save money. This is because your insurer may charge you interest on monthly payments. It's worth asking them if there is a difference, and if so, what it is. 5. Protect your no-claims bonus. A long-term no-claims bonus is the only best way to reduce car insurance costs, so take care of it. Protecting your bonus without making claims means that you can claim for car insurance within a set limit or under certain circumstances without affecting the amount of the bonus. This can increase the insurance premium by several pounds, but it becomes insignificant compared to the potential loss of a 90% discount on an insurance premium of several £100. However, the definition of a protected no-claims bonus may vary greatly from one insurer to another. Although accidents caused by another driver usually do not affect such a bonus, accidents caused by an insured driver may. The main thing is to always check the policy carefully. 6. Increase your voluntary contribution. Excess insurance coverage consists of two parts: voluntary excess and mandatory excess. Voluntary excess is the amount that the driver agrees to pay to reimburse the cost of insurance compensation, and it can be changed upon receipt of an estimate or purchase of a policy. When a driver increases the voluntary excess, it usually leads to a decrease in the insurance premium. Meanwhile, the mandatory excess is set by the insurer and cannot be changed or agreed upon. When a driver receives an insurance offer, the insurer examines the information provided and decides on the degree of risk to which the driver is exposed based on age, driving experience, type of car, any previous claims and other factors. If the driver needs to file a claim, the two excess amounts are added together, known as the total excess, and the driver must pay the total amount in damages. When you think about excess car insurance, it's really important to make sure that you can afford to pay the entire excess amount if you need to make a claim. When applying for or purchasing an auto insurance policy, it may seem like a good idea to increase the voluntary allowance in exchange for lower premiums, but if you cannot afford to pay the excess when you need to apply, you may find that you are unable to fill out the application because you do not have the funds to pay. It is also worth bearing in mind that the amount of the claim under the insurance policy must exceed the total amount of excess, otherwise the insurer will not pay. For example, if the total excess amount is £500 and the claim amount is £400, the insurer will not accept the claim. 7. Secure your car. Installing an approved alarm, immobilizer, or tracking device can give drivers an insurance discount of about 5%. Many new cars come with insurance as standard, so be sure to check if you have it and then declare it. Even if you can't reimburse the costs with your insurance, a thief deterrent can save you the hassle in the long run and the prospect of filing a theft claim later. Look for THACM approved devices. This is an industry standard recognized by most insurers. 8. Drive fewer miles. A lower mileage can help reduce insurance costs. The fewer miles you drive, the less time you spend on the road, and the less likely you are to have an accident, which is why insurers often favor such a lower risk and lower the price of your premiums. According to a GEICO study, car insurance is 13% cheaper if your mileage is 9,000 kilometers compared to 10,000. But you must honestly report your annual mileage, as inaccuracy will jeopardize any claim. Check your insurance policy if you don't use the car to travel to work or on business, which increases your insurance premium. You can get a cheaper rate. It is also important that drivers inform their insurer if they believe they may exceed their stated mileage, even if this may result in paying an additional premium. 9. Could you change the model of your car? If you decide to change your car, check with your insurer whether the model will have a significant impact on the amount of the insurance premium. Choosing the right car model is especially important for young drivers, as they tend to face the highest insurance premiums and will not want to choose a car model that makes it even more expensive. The cost of insuring a car model can be influenced by many factors, including engine capacity, safety features, and repair costs. Usually, the bigger the engine of your car, the higher the insurance premium. Drivers should also avoid buying cars with customized modifications such as spoilers or rims, as this can increase insurance premiums. The age of the car may affect the cost of insurance, but it works both ways. Older cars usually cost less, so they are cheaper to replace, but they also have fewer modern safety features, which can also increase their riskiness. 10. Keep your car safe. If your garage is full of garbage, remove it and use it for your car. Insurers like to leave cars in garages overnight, and this can significantly reduce your insurance premiums. In addition to not having to clean the ice in winter, there is a higher risk of theft due to keeping the car on the road, so storing it in the garage will affect your insurance premium. Additional tricks: name drivers, friends, and relatives. If you were previously insured as an additional driver under another policy, find out if you can transfer the no-claims bonus to your own insurance coverage. Some insurers do this, including Admiral. Try to get a discount by insuring 2 or more vehicles between friends or family members in the same company. Don't pay for insurance that you don't need. Some policies include additional benefits such as a luxury car, windshield protection, breakage protection, and legal engine protection. All of this can definitely come in handy, but it will almost certainly increase your insurance premium. If you are willing to take the risk, excluding these additional services from your policy can save you money in the short term. Job description. Think about how you describe your job. Although it may not seem like a big deal to you, insurance companies consider certain professions to be more risky than others. As a rule, this is a job that may require you to travel to more dangerous areas or at riskier times of the day. Data from Compare the Market shows that unemployed drivers typically pay about $400 more for car insurance than working people. Retired drivers have the lowest average annual insurance premiums, £303, compared with £611 for working drivers. When to buy? Compare analyzed the best time to buy car insurance and found that their customers saved on average more than 40% by buying car insurance 26 days before the renewal date, compared to those who extended it on the same day. You can purchase car insurance 29 days before the start date of the policy and fix the price you specified for that day. The study also showed that the closer to the renewal date, the more you can pay for your insurance premiums.